All right, today I'm going to give you 3 ways to reduce your mortgage payments when buying a home. So number one, permanent interest rate buy down. Typically you're going to pay 1 percentage point of the price of the home to buy down the interest rate, 0.25% or a quarter of a point forever. So that's a permanent interest rate buy down. That's one option. Of course, you're saying I'm paying 1%, so $500,000 home, you're paying $5,000 to buy it down 0.25% or a quarter of a point. That's one thing you can do to get the interest rates down. I don't like that one right now because personally I think interest rates will be down lower in the future. So I like this next option better. The second option, and this is what I just did, just bought a home first week of February and I got a temporary rate buy down, which is it's called a 2-1 buy down. So the first year it's down 2%. The second year it's down 1%. The third year it's back up to whatever rate you got the loan at. So for me, that's 6.375%. First year it's down to 4.375. Next year it's up to 5.375. And then the final year, the third year, it's going to go up to 6.375. Now, the reason I got this, February 2023, the reason I got this temporary buy down is I think by February of 2025, rates will be lower significantly. I'm thinking in the 4s, maybe 4s, 5s, and I'll be able to refinance and get a permanent rate that's much lower than the rate I have right now. The third way you can reduce taxes when buying a home, sorry, I gave you a hint there. The third way you can reduce your payment when buying a home is by protesting the taxes and making sure that you have a homestead exemption on the home you're purchasing. So I'll use myself for an example again. First week of February, I bought a home with taxes of $10,000, roughly $10,000. The home was valued, what I paid for it, at $355,000. The tax assessment was already $410,000. So right off the bat, I've got an easy way to get the taxes down significantly. I just sent in my closing disclosure to the tax assessor's office and they readjusted the taxes to $355,000. So right off the bat, all I did, I already got the taxes down to $355,000. That's going to save me a bunch of money. And then I can layer on getting the homestead exemption on there. So they'll reduce 20% of the value of the home. And I can't do the math that easily, but I will only be taxed on 80% of $355,000, and that will save me a ton of money. So the big things that I did there on the home that I purchased, and you can do these too, anybody buying a home can do them, is just look at the tax assessment, see what it's worth according to the tax assessor. What are you going to pay for it? If there's a difference there, that's easy. Then you can layer on that homestead exemption. You can also, and you should, buy down the interest rates right now. You might be saying, Jordan, that sounds expensive. It wasn't cheap. It was something like $7,500 to buy it down, a 2-1 buy down, but I got the seller to pay for it. So the seller paid for getting my rate bought down 2% the first year, 1% the second year. And then the tax protest, the seller had actually already done. So when I went to send in my closing disclosure to prove to them that I paid $355,000, it's valued at $410,000. He's being taxed at $410,000, but this year's value is already down to $355,000. So that's 3 easy ways that you can get the payments more affordable on homes you're buying. Because remember, a mortgage payment is principal, interest, taxes, and insurance. So when your interest payment is lower and your taxes are lower, it's a big part of the mortgage payment, and that'll save you a ton of money.